The Reserve Bank of New Zealand, they just cut rates by 50 basis points, right? So this is what we need to see for them to continue that dovish cycle that we are anticipating. Yes, this could lead to a weaker NZD currency, but what we have to pay attention to is something called forward guidance. So all that means is after the rate decision, they have a press conference and they have a statement where they're explaining their future expectations on interest rates, labor, growth, and inflation, okay? So in order for us to see more weakness in the NZD currency, we need to see the projection of inflation coming down in a downtrend. So they have to tell us, right, that they're expecting inflation to have lower pressure, and they will tell us why, especially seeing weaker growth. That is also deflationary. This is what's gonna help us determine, can we take advantage of a weaker NZD currency or not, right? So after the rate decision, we already see that they are expecting inflation to further decline, which is a good sign. But is it enough for investors to start taking advantage of sells in the NZD currency from this meeting? We are already at the end of the year, which is something that we have to think about, right, moving forward, because expectations is now leading on to next year. And what could cause interruption in their monetary policy is something called tariffs. The situation that happened with Trump that came into office, that he's actually increasing tariffs for these countries, that could also be inflationary, especially for a country like New Zealand, right? Because what's going to happen, we see commodity prices start to rise. New Zealand is also impacted by commodity prices like wheat as well. And if we see commodity prices rise, that could increase the NZD currency, which is also inflationary. This is definitely something that the Reserve Bank of New Zealand is focusing on. So even though monetary policy, other than geopolitical fears, we're expecting more weakness to come in from lower inflation, weaker growth numbers, weaker job numbers, this geopolitical concern is something that could impact our trades, right? So just being aware, after this rate decision, I do like more weakness in NZD. I feel like the rate decision was overly dovish. I think all the confirmed signaled that inflation is coming down. They're expecting weaker growth. They're expecting all of this deceleration in inflation and interest rates. The OCR is expecting to also lower. These are very good signs for us to be shorting the NZD currency. But now we have to be concerned about what could cause inflation pressures to rise. And Trump did give us that scare previous Asian session, and this is also inflationary for commodity prices. And again, if this continues to linger, this could be that only factor causing the Reserve Bank of New Zealand to remain cautious when it comes to cutting rates. And if that does continue, we're going to see NZD probably be in consolidation, or we could see it rise. I'm totally against that. I want to take advantage of more weakness in NZD moving forward. So this is why I did take advantage of those NZD sales when I started seeing those dovish comments come from the Reserve Bank of New Zealand's chair. Because after the rate decision, there's a press conference, and right away, like right off the bat, very dovish comments saying that they're leaning more towards rate cuts, which is a very good sign for us to be looking for those sells. He was also confirming that interest rates is coming down. He's also showing that inflation, they're more confident inflation going to hit that 2% goal. Everything that we need to look for weakness. But the only curveball that we have was tariffs, because now that could affect their whole agenda. Okay, so then before that, we had Australia CPI. Well, let's talk about that as well. Pretty much the decision for Australia CPI was more of a dud, because the Reserve Bank of Australia already confirmed to us that they wasn't going to show so much influence in one print. They want to see a trend of data before they make a decision on their next rate decision. So even if this print would have came out higher or lower, it would have had to be a surprise beat or miss in order for us to take advantage of this trade. But overall, data came out mixed, so that just wasn't a tradable opportunity. So hopefully you guys stay away. But this is just a quick update for the Reserve Bank of New Zealand's rate decision. I still like weakness to come from this pair. So we just have to be aware now of more of economic data for New Zealand, if we see that the trend of inflation and growth and job data start having those lower prints, this is what's going to help us continue to look for those sells. But the main focus is geopolitical tensions. If we see more escalations, because NZD is a risk asset, market fear puts more weakness in that currency. But if we see that tariffs become an issue, and we see that if he puts more percentages in other countries, an increase in tariffs percentages, that could be more inflationary. That geopolitical scare can increase the price of NZD. So these are the two things I would definitely focus on moving forward, okay? Other than that, just journal everything that happens in these markets, right? Because when you're understanding how rate decisions is impacting the markets now, and you're looking at the reactions, you're seeing what's important, you're seeing what's not important, you're gaining all of this knowledge and this information. So now when there's the next rate decision for any other currency, you're gonna start getting better and understanding it more and more, and you're gonna be able to take advantage of these tradable opportunities. This is what I did, this is what helps me. And then paying attention to the statements, paying attention to central bank speakers, because now after the rate decision, RBA, the Reserve Bank of New Zealand members, they're gonna be coming out now, giving their comments on their thoughts on inflation, their thoughts on future rates, and that could also impact the markets too. So just because this rate decision is over doesn't mean that there's any more opportunities moving forward, okay? So just be prepared for those reasons to come out. You're gonna be able to take advantage of a good trade. Hopefully you guys enjoyed this video. Comment below if you took advantage of this trade, and I'll see you guys in the next